Alright guys, welcome to this episode on what I like to call, I guess, standard deviation, or what are your odds of a stock continuing to move after it already made a move. So let's say you got AMD and you like this stock and you see it moving, and for right now we're just going to short this one because you already missed the move, it's already gone, and you're sitting there going like, well, what are the odds of it to continue to run up? That will be a standard deviation thing, which I'm going to show. So, but let's say you say, well, okay, I think this is about as high as this is going to go. You're doing your risks analysis, you're figuring out what's the best way to go. So you want to buy in, and you want to buy in about right here. Should you go long? Should you go short? Which direction you're going to go? Well, box it in. Let's find out. This strategy never changes. You got to stay within that strategy to see what direction the market wants to take you. Is it done? Will it continue to run? What are the odds of that? Let's find out. So the market comes in and it decides to go down. Okay? So you're like, oh, maybe I shouldn't have gone long over here. Well, this should have never been the area we should have gone in because the market never told you where it wanted to go. It was stuck in a range. If you're going to get in, your odds are better here because it broke below. So you have a better chance of shorting this than going long because it's telling you where it wants to go. Could this turn around and go up? Absolutely. That's where you put your stop loss right over here. You figure out where it should be, where you need to stop and get out and go find another stock. So you decided to short this one. Oop, it came back to test it. And there it goes. It's working its way perfectly. Alright, so you're about right here. So now you're deciding, should I get out or not? Well, where's your exit strategy? If you figure that you should get out at this point right here, once it hits the VWAP, then that should be your exit strategy, even if the market continues to go down. Because you don't know what it wants to do or how long it's going to stay doing that. Okay? Let me bring this in. Everybody knows about the standard deviation. Let's say, for example, you got into the stock right here. Oops, my drone going? Alright, so you're in the trade in here and you bought it at whatever price it was. And you have an exit strategy practically that once it hits the VWAP or once it hits your resistance or your support, that is your exit strategy. You have a 34% of hitting that strategy because you already know where you want to exit. For you to figure out if it's going to continue to go or there's more to it, you just dropped yourself down to 13% of being able to make it to that strategy, to be successful. 13%. So you did good. So if you stay in here within your area, it moved from point A to point B, the market did whatever it needed to do, you got in, you got out, you have about a 64% chance of making that work. Okay. Will it continue to run or will it go back up? Well, your opportunity just dropped down 13% because you don't know if the market wants to keep running down or if it's going to sit here. So now staying in it too long makes your odds drop. Okay, makes sense? So sitting in something too long to get greedy brings your percentage even farther down. Okay, and this is where now it becomes overnight. You're like, oh, should I stay overnight? What are the odds of that? Well, now you're down to 2% chance of getting it right. Will the market continue to go? So unless you have really strong, overwhelming, charts that are showing you, yeah, the market will continue to go a certain direction, the longer you stay in that trade, your percentage drops lower and lower, getting anything out of it. Alright, so let's say you exited right here, and now the market's doing its thing. Well, you actually did pretty good. Look at that. So yeah, you could have gotten squeezed out a couple more bucks out of it. But you know what? You're never going to get it 100% right. Nobody does. Not even the pros. I mean, everybody, you can only do what you can do. So, alright, so now you say, well, I wonder if I should stay in this stock. Remember that probability? You dropped. So you are from point A to point B, you got yourself a 8% chance of getting it right. Not bad, because you already figured there it goes. Boom. You get out. You're figuring if can it run any lower. Well, you just drop down to what, 13%? Now you want to go overnight. You get a 2% chance of getting this thing right. Let's see. Doesn't tell you what it wants to go yet. Well, look like you might have done well. But there's no buyers or sellers, so even if you try to get into this, or if you were sitting in this stock, just kick back up where you were before. We're right back to the $24 one. And it's playing all over the place. Look at that. Was it really worth it? I don't think so. That's why the market will always try to take your money. So you got to stay within what you see. Okay? So if you know that this is overextended and you have your entry strategy, get your exit strategy, get in, get out, make your money, and be done. Okay? Because the longer you stay in the trade, hoping to squeeze out a couple extra dollars, your lower your chances are of getting it right. Okay, guys?